Well, Goldilocks is in play this morning with good readings across the board, including Tesla, although it started up higher and has gone a little lower and things are moving around. The markets will be looking at bonds with one eye on the economy and then the other eye on the bonds. For Goldilocks to work, you need what Powell talked about. Somehow the economy needs to continue to move along nicely with good employment and at the same time falling inflation. I will give a summary view on FSD version 12 and the Elon demo, along with some details about the bond market. So this is Randy Kirk. Hit like, subscribe, and notify if you want to be sure to hear Brian Wang later today. We'll be talking about transformers, electricity shortages, DOJO, NVIDIA, clusters, all kinds of things way above my pay grade, but really, really important for you to know in order to fully understand Tesla. Anyway, we'll also be talking about, we'll be, that's what we'll be talking about. So hit notify and then join Patreon. Thank you very much for those who joined over the weekend. And we still need about 12, I think, to join by Thursday. So please consider joining Patreon and getting your free audiobook. All right. In the early morning today, the market is moving more broadly than usual. In fact, the Dow is now up more than the NASDAQ, which has not been the case during most of the year. And this is unusual because this year the NASDAQ has been moving much faster than the Dow and the S&P because it's been all about the tech stocks. The folks who follow the market, a lot of the folks who follow the market have been looking for the broadening out of the rally, the broadening out of the bull in order to give it the legs that it really needs in order to continue into this second level, which I'm expecting to take place and have been talking about now for a couple of weeks. This, therefore, would be a good signal to see some broadening out. Now, that would mean potentially there could be sometimes there would be money coming out of the techs and going into the broader market. This would be a rotation, again, an expected rotation. All right, now we're going to talk about the bond market here for a minute. I hope this is interesting to you. The bond market is being cooperative this morning in the early going, with the 10-year yield dropping below the support level of 4.22 to 4.20. Now, that doesn't sound like a lot, but that is I'm going to take the risk that you're going to yawn and say, oh, Randy, I get it. But no, there's a lot of you who are new to the bond analysis. Some of you still don't get the bond analysis that I've talked about in the past. So I'm going to go a little bit deeper right now about the entire bond market. All right. What we watch is very complicated and confusing. It's confused me my whole life. I do get it, but it always confuses me. Because we watch the yield. What we're reporting on is the yield. It would be like if stocks were reporting their dividends as the main thing everybody was looking at instead of the underlying stock. So there's an underlying bond, but nobody looks at the price of the bond. We only look at the yield, the opposite of what we look at with stocks. So that's why it gets complicated. So when you buy a bond for $1,000 and it has a yield of 4, it would be like paying for a stock at $1,000 with a dividend of 4%. If you keep that bond though for 10 years, you will always get the 4% coupon. However, if you sell the bond before maturity, there is a market for that asset, and the market is willing to pay a higher yield for the bond, say 5%, then the bond value drops and you get a lesser amount. If the bond yield drops, say to 3%, then you get a premium on the underlying asset. All right, I hope that makes some sense. Therefore, in looking at the bond market, you have to think of the bond buyer as contemplating both the available interest he'll get, like the dividend, and also the asset going up or down in value, like a stock. Right now, folks who buy bonds are less interested in buying those assets because they're figuring yields will continue to go up, further hurting the underlying value. They're waiting for the turning point, just like you would sometimes with a stock. They can actually make money on the interest. They can hold on to that bond if they want to and just keep getting the interest, or they can make money out of the rising value of the bond as those yields drop, as inflation drops. So this morning, People are buying the 10-year bonds and the yields are dropping. They are dropping below the support level of 4.22. What we're looking for, of course, just like with stocks, we're looking for that to hold for the entire day, to be under 4.22 at the end of the day, to be an actual signal that maybe bonds yields, the 10-year bond yields, are going to continue down. So, but they're selling at the same time, they're selling the 2-year and the 2-month bonds whose yields are increasing this morning. The 10-year move is good news for the market, and the market is up partially for that reason, and all millions of other reasons, of course. But the bond buyers are selling these shorter term bonds, and those yields are going up, moving the longer, and we call this an inversion. That is the opposite of what you expect. Normally, you want to get more yield, you want to get more a higher interest rate when you're turning over your money for a longer period of time. But right now, people want more interest for the short-term bond. And this has been true since last July. No, not a month ago, a year ago, July. This is the longest there's been an inversion, and it's one of the widest inversions in history. I say this suggests something different is going on. I've been saying that, for about 6 months. I say this suggests that it has nothing to do with the normal way people look at it and saying, it's a signal of a recession. Well, where's the recession? We've been going now for 13 months with this inversion. There's no recession. There's no recession in sight. So how long does it take before this particular inversion is no longer about a signal for a recession? Let me know in the comments what you think about this entire analysis. All right, there's little other economic news this morning. So the market seems to be moving based on continued momentum from Friday, where Powell's talk, the Fed chair's talk on Friday, was eventually seen as neutral, but with a nod to a good economy going forward. So everybody was hoping it would be a neutral talk. There was headlines that said it was hawkish. It was not hawkish. It just said, yes, we could still raise interest rates if the data say so. And what would the data be? That would be the PCE later this week printing higher, and then the CPI printing higher next month before the next meeting. So, but if the PCE continues to be flat to down, probably the market is going to see that as a good signal. I'm looking for the core PCE year over year to be under 4%, and that will be an amazing signal, and the bull will be going crazy. All right, now let's talk about Elon's drive on Friday night, which I thought might help the stock this morning, but right now, based on where the stock is, what stock's doing, I would say it's having absolutely no effect. So this was a miracle. This drive was a miracle, okay? I'm going to explain it to you. If you haven't figured this out yet, I know all weekend I've just been thinking about it and thinking about it and thinking about it and talking about it and having people on the show about it. If you didn't see the show I did with Larry Goldberg, you need to see that one. I'll put a card up in a minute. All right. Elon drove around for 40 minutes with only one intervention of any kind. It wasn't even close. There wasn't even another time where it was like, maybe I'm going to have to intervene. No, 40 minutes with one intervention. Yes, it was a safety intervention. That doesn't really matter. People are like, it's a safety intervention. It doesn't matter. Any intervention's an intervention. The fact that there were no other interventions for 40 minutes is absolutely amazing. 2, I'm assuming that Elon figured there would be no interventions. Otherwise, he wouldn't have done the demo. That means that the drivers all over the world right now who are logging thousands of hours are getting no interventions over hours and hours and hours of driving. Otherwise, Elon himself, and driving it for the last at least a month or 2, he's been driving version 12, has been getting no interventions, or he wouldn't have done this deal. All right, number 3, the drive was done without a need for maps, without a need for Wi-Fi, without a need for hard coding, without a need for any experience having ever driven on any of these routes before. He was just taking random places and it was just going wherever. There were plenty of obstacles such as people, roundabouts, construction zones with cones. I mean, there was plenty of things that the car had to actually deal with itself. It was mind-bogglingly amazing. It was a bloody miracle. And anyone with a brain should see that. For me, it has become the more miraculous the longer I've contemplated it. Number 5, it has huge implications for the timing of the final move to hands-free or steering wheel-free driving. And it has huge implications for Optimus. As Elon acknowledged in a post over the weekend on X, he said a simple yep to the question of, does this speed up Optimus? All right, your thoughts and comments on FSD, on the demo, and on how it might help Optimus. I'd really love to see your comments on this. You know I respond to your comments. All right. Now, the newest version of, this is a post this morning, the newest version of FSD, not version 12, but the newest 11 ... I can't remember the numbers, to which is getting far less reports of steering wheel nag. And that was reported, and Elon responded to that and said, yeah. Now, I'm sure if you're using FSD, you're going to be going, yeah, too, because the steering wheel nag is the most obnoxious part of the entire project. So the fact that it's giving less nag, again, is showing more confidence in the product and what it's able to do. Now, the reality that the stock is only up, last time I checked, $1.50 tells us that even the community hasn't fully grasped this yet, even though I think I heard that 1 million people had seen that video. But as far as the community and as far as the world in general is concerned, it must have been a non-event, because those who do get it, they see it as historic. Lots and lots of posts on X this weekend talking about what a big deal it is. But the overall this morning with regard to the stock is not yet. And also not any of the expected FOMO for all these upcoming events. A new poll released over the weekend showed that the #1 reason Tesla owners have sold their cars to go with another brand is Elon, and or their problem with negative virtual signaling by driving a Tesla. It turns out, however, that this is a tiny fraction of total ownership. I think something under 3%. And my guess is that for every person who has sold due to this, there are 10 who have become interested in Elon Musk himself, just interested in him due to his positions on the issue, especially freedom of speech. If he is losing more than winning on the subject of freedom of speech, our nation is in serious trouble. All right, so Tesla was up more than the market this morning, but not enough to suggest that FOMO is clicked in. Normal move. All right, let's go ahead and take a look at where things are now just before we end this. Oh, look, see here, Tesla's actually down this morning. Now, why would that be? I have no idea. It's down just fractionally. Amazon is also down fractionally. Microsoft is down fractionally. The overall NASDAQ has been slipping since its opening spot this morning, and the Dow is up strongly. Okay, this looks like a rotation and maybe even some money coming out of Tesla in order to support moves into other stocks into the broader market. That's about the only thing I can think of. The Cathie Wood stocks are also mixed, are right around zero on the Cathie Wood stocks. Let's take a look now at the rest of the things that we look at every morning. Breaking news. Okay, that's not anything that you care about. Well, you probably care about it, about Trump. Maybe you care, maybe you don't. All right. Stocks. So we just already talked about stocks. The Dow is up strongly, almost well, 79.79, not quite 1%. The Nasdaq's up 0.5%, as is the S&P. The crypto is still sitting there around 26. The dollar eased a little, but it's still pretty strong. Gold, 1946, moving up day by day. It's been moving up. Oil now at 80, almost 81. Don't like to see that. It was really doing well earlier this morning, but now it's moving up. That could be affecting the techs. And then bonds, now the bond has moved up from where it was early this morning at 4.20. It is now 4.218. Don't want to see that other 0.004. Don't want to see it go back to 4.22. So anyway, that is not good news. And then on the rest of them, the 2-month and the 2-year continue to be higher this morning. All right, so as I mentioned earlier, if you haven't watched the video with Larry and I discussing the FSD drive, that was by far the most watched video over the weekend. In fact, probably the most watched video on this channel for the last month. So I'll put the card right there for that. And then be sure to hit the like button, the subscribe, and the notify so that you help the channel, as well as help yourself to be reminded about that Brian Wang episode that's going to be later this morning. It'll be a little techie. I'm going to warn you, it's going to be techie, but a lot of you do like that tech stuff. And we'll be talking about stuff, as I said, that's above my pay grade. So I think that's all we've got this morning. Looking for Tesla to finish well into the green this morning and continue in the green all this week. That's my theory. Also with the market continuing the next leg of the bull. All right. It's been great talking to you.